Now the next speaker will talk on the importance of environmental management accounting is Mr. A.D. Nuwan. He is the senior lecturer of University of Jayawardhanapura. By profession, he is an MBA, BSc and SAFA-CMA from Sri Lanka and UK. Currently, he is engaged in the research in environmental and sustainability management accounting. Mr. Nuwan.
Good afternoon, members of the head table and the audience. I remember one speaker saying that speaking before the lunch break is a challenge, and I think speaking after the lunch break is even a challenge. And being the last speaker in that session is even a greater challenge. So taking that challenge, let me present you this concept or the approach called environmental management accounting. And before I present my presentation, let me take you down the path of memory till 2004 December, to be exact, December 26th. And this is the day we had a tsunami which devastated most of the coastal line of Indian Ocean countries, taking thousands of lives. Also in 2011 we had tsunami in Japan, and the other part of the world, in US, we had Hurricane Katrina, then again Hurricane Andrews. All these things are natural disasters. On the other hand, there were a series of man-made disasters or industrial accidents, I would say, starting from Love Canal in 1920, then Chernobyl in Russia, then again Exxon Valdez oil spill, then latest been the BP oil spill. Now all these incidents affect or shape any profession. An accounting profession is not an exception. Therefore, today I'm going to present you how all these environmental issues or the concerns are shaping a growing body of practices called environmental management accounting. So this is my presentation outline. Initially, I'll be discussing about the rise and the arrival of environmental management accounting. Then we'll try to look for some definitions to understand what this is exactly. And thereafter, I'll present you some of the techniques and benefits you can derive, and also some of the reporting aspects of environmental management accounting, and also my findings of a research study which I carried out on the hotel sector in 2011. I'm moving to the first point. As I said, there is an increased public awareness about these environmental issues. Maybe the industrial accidents, the pollution, the climate change or the global warming, the nuclear waste, deforestation or desertification, and because of all these things, corporations have to be environmentally prudent. And if I look at the little bit of the historical development of this environmental movement, 1970, the decade marks a golden period. In 1970, we had, maybe fueled by the book Silent Spring, which was published in 1962. And then 1970, we had that massive Earth Day Summit. And 1971, Greenpeace, the organization, was established. Then again in 1970, EPA, the Environmental Protection Agency in US, was established. Then in 1981 in Sri Lanka, the Central Environmental Authority was established. And because of all these reasons, management had to acknowledge the power of the environment. Not only that, there are certain conceptual or the practical developments like corporate social responsibility, triple bottom line, sustainability business, and also availability of so many reporting frameworks, ISO 14,000, 26,000, then SA 8,000, AA 1000, and also proliferation of many organizations and the forums and initiatives. When Rio 20 Plus Summit is just over, we are having another conference on sustainability. So many organizations, forums, and conferences. Now, because of all these things, because of all these reasons, there is a growing body of practices known as environmental management accounting. So let's try to understand what this is. Well, there is no formal definition for environmental management accounting, because no organization takes the responsibility of these practices. So its boundaries are loose and still being developed. However, we all agree that it's an application, an extension of environmental accounting, that is accounting for the environmental considerations. And if you may look at this table, you can see that environmental accounting can take place at the national level or even at the firm level. When environmental accounting takes place at the firm level, and when your audience is internal, it's called as environmental management accounting. And also if you look at another definition given by the US expert group, it says the identification, collection, and the analysis and the use of physical information as well as monetary information. And this is the interesting thing about environmental management accounting. This shouldn't be given in financial values, but this could even take place with physical values such as kilograms, liters, then even quantities. And there came a period that a lot of organizations, scholars started to define and giving concepts of environmental management accounting. Then, in a push towards standardization of these concepts, IFAC issued a guidance document in 2005, which is IFAC International Guidance Document on EMA, which is freely available in the web. Well, with that, let me move on to my next area, the techniques or the tools of environmental management accounting. And there are many: accounting for energy and materials and even water, then EIA, environmental impact assessment, flow accounting, this is called as input-output balance used in clean production, life cycle costing, life cycle design, activity-based costing, and the sustainable balance scorecard. Because of the time limitations, I will not go into details of these techniques, but present you some of the key techniques. Now, most of the time, the overhead costs that are incurred or environmental costs that are incurred are hidden in the general overheads. If you look at this simple diagram, this illustrates how this could happen. The toxic waste generated for product B could be allocated or simply considered as a general overhead. And it could be allocated to product A and B, overstating the cost of product A and understating the cost of product B. This is where activity-based costing could be used and have the proper cost allocation for product B, because ABC analyzes or identifies cost drivers and causes of cost and gives the correct cost. Also, another technique or a tool which can be used in environmental management accounting is the sustainability balance scorecard. We all know, even in Sri Lanka, balance scorecard is heavily used as a management or performance management tool. So in this regard, environmental factor could be considered as another perspective in the traditional balance scorecard, or it could be incorporated into the traditional perspectives of the balance scorecard. So there are different ways in which you can incorporate or consider the environmental factor in your existing performance tools. So following these techniques, there are benefits you can derive. Now, from the discussion I made, we need to understand that EMA is not just a tool. It's a broad set of principles and approaches that would support your so many other environmental management tools. Therefore, these are the benefits you can derive, which are broadly divided into three: compliance, eco-efficiency, and the strategic position. The compliance is where you support the environmental protection by complying with your self-imposed policies or the regulations. And also, EMA would support eco-efficiency by reducing the use of energy, the use of water, and the use of material by being eco-friendly or eco-efficient. And also, EMA could support your long-term strategic position. And I should say that these broad benefits are clearly overlapping, and it's very difficult to identify a clear demarcation. Now, for you to get these benefits, it's not an easy task. So there are certain challenges. Now, the main challenge is the inadequate development of the communication channels between the accounting department and the other departments. Because when it comes to environmental data, most of these data are collected not by the accounting department, but by the other department, so that the inadequate or the insufficient communication acts as a hindrance in this regard. And also, as I explained earlier, most of these environmental costs could be hidden somewhere else, and those will not be brought to the attention of the management. And also, there is inadequate collection of environmental related costs. And finally, most of the decisions, especially the investment decisions in particular, are based on incomplete information. They have not totally recognized or fully recognized the environmental impacts that could be created. So with that, let me move to my last point. So before that, there are certain reporting aspects of environmental management accounting. I'm sure that much has been discussed and deliberated on this. GRI, then again ISO 14000, ISO 26000, and ISO 26000 is not a certification standard. We can't say that we are ISO 26000 certified, but it's just a guidance. So with that, let me move to the last part of my presentation. This is one of the research which I carried out in 2011 on the listed hotel sector in Sri Lanka. So despite the low level of awareness of environmental management accounting, I identified that there is a high extent of use among the listed hotels in Sri Lanka. And the widespread application was the accounting for material and accounting for energy. Some organizations account for different types of energy, diesel, then electricity, then furnace oil and gas. And sometimes they even go to the calculation of energy cost per guest and do the appropriate comparisons. Not only that, there were some other applications as well. A use of alternative sources of energy, then life cycle design. And if you look at this restaurant where you don't find air conditioned machines installed, no fans as well. So throughout the life of the project or throughout the life of the site, you save millions of cost in terms of energy. And also environmental friendly design. This entire hotel is built on pillars so that it will not disrupt the water flow or the animal flow. And these practices, these so-called practices have been shaped by or driven by many factors such as favorable public image, the regulatory requirements, ISO 26000 specifications, and also pressure from the group you get. And also I noted that most of these practices are applied or shaped by the engineers. And this is not a new phenomenon, and this is how even cost accounting was developed in the early part of 18th century. However, now despite this high level of use, I noted that this does not portray a comprehensive or an integrated approach to environmental management accounting, because these practices are mere responses for internal and external forces, and therefore the sustenance over a period of time cannot be guaranteed. For example, when the energy prices go up, the intensity of accounting for energy would improve. But when the energy prices come down or when you have other priorities, the intensity of accounting would diminish. Therefore, I suggest that long-term sustenance of environmental management accounting goes beyond mere application or the superiority or the sophistication or the complexity of the technique we are using, and it requires a holistic approach. And this holistic approach should have comprehensive coverage, not one or two items, but comprehensive coverage. And also there should be stakeholder engagement on a day-to-day basis. Your suppliers, your customers, your employees, and the community should be engaged. And finally, this has to be driven by a clear strategy. Well, with that, I have come to the end of my presentation. And let me conclude by saying that environmental management accounting is an opportunity where the management accounting professionals can display your contribution towards the environmental agenda. And also, EMA would enable us to make a difference to the world we are living in. And thank you very much.